Hello traders and welcome to another video review. Today is Tuesday, December 12th, 2023. Let's take a look what's going on the economic calendar today. The first set of data comes from the UK in form of the average earning index, which is less than expected. 7.2% is the earnings index, and the previous was 7.9. Climate count change is at the level of 16,000, which is slightly better than the expectations of 15,000 and better than the previous 0.9. And employment change quarter to quarter is at the level of 50,000, which is slightly lower than the previous change of 54,000. Unemployment rate in the UK stays at the same level of 4.2%. We are still waiting at the German current conditions and economic sentiment data. Those data are scheduled for release at 11 o'clock together with the economic sentiment data from the whole European Union. The next data from the UK as well. At 1 o'clock we got the GDP estimate to be released. Then we got the core CPI and CPI data from the US, and those are the key events of the day. The market participants expect the CPI to decrease from 3.2% to 3.1% and the core CPI to increase from 0.2% to 0.3%. The yearly CPI should stay at the same level of 0%. Then we have the speech from the ECB McNaull at 2:30, and at 6 o'clock another very important data release, EIA short-term energy outlook. So for all of you crude oil traders, this is something to keep an eye on. Federal budget balance is scheduled for release at 8 o'clock together with the API weekly crude oil stock is scheduled for release at 10:30, and 15 minutes later we got the current account data from the New Zealand. So it looks like a quite busy day with the main event of core CPI data. So it will be worth to take a look at the US dollar related pairs. We are going to start with the, of course, euro dollar. What is euro dollar doing is quite interesting. Why? Because we just went towards the very important demand zone located between 1.0748 1.0770. This demand zone was violated, and the US dollar is already 2.67% away from the last swing high. Nevertheless, the bounce was very shallow. It went towards the 50 periods moving average first. Then, as you can see, the bears were trying to break a little bit higher. Nevertheless, it looks like there is an intraday technical resistance here we can place, and this technical resistance is located somewhere around 1.0780. Okay, but this movement here is corrective in the nature. It looks like the bulls are trying to go towards the level of 1.0822, the next technical resistance, but the momentum, as you can see, is barely off the lows, and it's definitely below the level of 50 right now. So we might see some horizontal movements here, but then at the end, sooner or later, it looks like the movement to the downside will resume. The next target is 1.0697. So the outlook for the euro to dollar is bearish. Let's take a look at the dollar to the Japanese yen. So we remember the very nice movement to the downside last week with the low at 141.70. Now there was a bounce, and the bounce was very substantial because the bears basically gave up. So the bulls could go as high as the level of 146.48. So that's a very nice bounce. All of the Fibonacci retracement level has been broken, of course, and now the situation is not that clear anymore because we are starting to move lower again. The next technical resistance is 147.50, so there is some room to the upside still needed to cover this ground. 146.60 is the intraday technical resistance. 145.22 is the intraday technical support. This level here that I have with a thick red line is very important technical support, 144.34. It was violated, but of course the automatic reaction is to push the prices higher for a pullback. Now, if there is another impulsive development to the downside, maybe backed up by the today's data release, the outlook would be even more negative for US dollar to Japanese yen. Momentum is slightly negative, 46 points. So the bounce from the extremely oversold conditions was done. Now the market is ready for another leg to the downside. The US dollar to the Canadian dollar, maybe this one, is another pair which is in a quite specific place right now. So we got this zone here between 1.3594, 1.3628. The market tried to break above it. Right, you can see the pin bars here, and we've been hovering around this level for quite some time, and now it looks like the bears are getting control of the market again. Momentum went to the level of 61 points, and now we are back towards the level of 40. So it looks like if we break just here below this level, 1.3550, the bears might visit the recent swing low from the 4th of the December, located at 1.3479, very easily. Right, if we zoom out, we can see there you go, we can see that there is still one more level here. Let me just get rid of this measurements here. Okay, maybe we need them for the daily. There you go. Okay, maybe leave it. Okay, so we still got one more technical support here, 1.3380, and the momentum on the daily time frame chart is still negative, and it's reversing down again. So it looks like the US dollar is being sold, and the Canadian dollar is being bought back up on this pair as well. Because of the energy outlook, let's take a look at the crude oil. This is a daily time frame chart. What can we see here is, of course, the corrections, and those corrections are quite different, because this one is the biggest one, 9.35 to the upside, and this one is 7.43. This scenario here is taking place right now because we hit the extremely oversold market conditions. This is the low, this is the lower low, and the swing low. As you can see here, the momentum is at the very same level, so it is a time for a bullish movement to the upside that cannot be bigger than 9.35 if we want to keep this down movement intact. So let's switch to the 4-hour chart. On the 4-hour chart, we got the scenario ready. We got few levels here. As you can see, our scenario was that the market should went a little bit higher towards this level here, 73.78, 74.12, and this is still valid scenario. But then, if this level is hit, we should see some sort of the deterioration lower. Okay, so technical support is the swing low, again 69.80, 68.80 apparently. So this is the technical support, and if the market will be unable to break even above 72.15, because it looks like the market might even reverse from this level, that's even worse, because we are going to extend to the downside and test this level and then break even lower. Do we have another target for the bears? There you go, it is another target for the bears. Next technical support, 66.81, so it's even lower. So the overall, the price of the crude oil is getting cheaper and cheaper. It's getting lower and lower. And for now, there is no indication of this trend termination or a reversal. More likely the market is doing the pullbacks, most likely in three way, for example A, B, and then C, and impulse A, B, C, and impulse. And this is the pattern we expect to be present after this pullback to the upside is completed. So another spike to the downside towards one of the previous technical support levels. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.